What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I have a dividend stock that I bought. It's a new dividend stock. I will never sell it. I like the way their structure is and their business model. They have solid revenue and dividend growth. They're a diversified real estate investment trust, and I'm definitely capitalizing on these guys. I have more resources now being a travel nurse to buy certain type of dividend stocks and diversify my portfolio. So this one's really solid. I'm going to reveal to you why I like these guys and why I bought them. Again, this is not financial advice for entertainment purposes, only disclaimer in the description. Let's check this REIT out right now. And that real estate investment trust is NexPoint Residential Trust. It's sitting at 4611. Dividend yield of 3.64%, a PE ratio of 51.74, average volume 168.06K, market cap 1.8 billion US dollars. Year range is 38.67 to 95.04. Its day range is 45.12 to 46.61, and its previous close was 46.05. So in the past day is not done too hot against the S&P, and if you look in the past 5 years, it actually has done very well against the S&P. It's still beating the S&P in the past 5 years. These guys took a huge hit. At one point, they were 87.75 and took a huge dip. During the pandemic, they were 26.65, right around that point, and a low point, 21.69. And right here, they were 88.23. So they were popping at one point in March 2022. Took a significant nosedive at 46.11. So that's one thing that I capitalized on was the price. And even in 2020, at one point, it was $52. So these guys jumped up significantly and have done very well against the S&P, which is attractive. So let's check out these guys as a company. NexPoint Residential Trust is an externally advised, publicly traded real estate investment trust focused on the acquisition, asset management, and disposition of multifamily assets located primarily in the Sun Belt region of the United States. The company pursues investments in Class B multifamily real estate properties, typically with a value-add component where we can invest significant amounts of capital to provide lifestyle amenities to workforce housing. Our value-add strategy seeks to provide a safe, clean, and affordable home to our residents while maximizing returns to our shareholders. NXRT is externally advised by NexPoint Real Estate Advisors. So one thing that I really like, they have 41 properties owned, 15,387 units owned, 10 markets across the Sun Belt, 70 plus years of combined investment management experience. So I'm going to go more in depth with these guys. So here's their highlights, the occupancy and trends. So the rate is 94.2%, it's leased at 96.6%, and its 60-day trend is 92.5%. So the occupancy rate is doing very well. So that's one thing that I really like. Also, since inception, the properties currently in their portfolio have completed 6,398 full and partial, 4,510 kitchen and laundry appliances, and 9,624 technology packages, resulting in $139.48 average monthly rental increase per unit, and 21.8%, 70.8%, and 33.5% ROI, respectively. So I like that as well. I'm going to go more in depth again. The average rent from 2019 to 2021 has went up 14.3%. The average household income in the fourth quarter in 2019 and 2021 has increased, so that growth rate is at 15.2% in these areas, which is also attractive as a stable dividend stock and a stable real estate investment trust. So again, this is not financial advice. This is for entertainment purposes only. But again, the rent growth correlates with residential income growth in that area. So there shows sign of stability. So I'm going to go a little bit even further. So here's the first quarter of 2015, the rental revenue in millions. Okay, right here is at 30, and now it jumped up to about almost, it's like touching 60. The total revenue has gone up as well, and that correlates with that very closely. Now look at the compounded annual growth rate, 10.6%. So the stable occupancy and increasing rent per unit is pretty solid. Now I'm going to go more in depth again. So check out the revenue. This is in millions of US dollars. Now remember, is a real estate investment trust. 90% of what they make come back to us as investors. So 2015, this is in millions US dollars, 117, 2016, 132, 2017, 144, 2018, 146, 2019, 181, 2020, during the pandemic, it was 204, and 2021, it was 219. So from 2015 to 2021, there was a huge increase in revenue. Strategically, the way these guys have done, and with their strategy, it is paying off, and it is doing very well. So there's a huge increase in revenue. There is a significant dip on these guys, and I'm capitalizing on these guys. I don't know if it'll jump back to 80. Again, I'm not giving financial advice for entertainment purposes, only disclaimer in the description, but this is looking very attractive. So I pulled the trigger on these guys and bought shares Friday with these guys, and I'm going to show you their dividend growth history, which is phenomenal. Check this out. So in 2015, these guys were a new kid on the block. They were at 21 cents, and then 2016, they were still at 21 cents. Then they jumped to 22 cents in 2016. Then they jumped to 25 cents in 2017. In 2018, they were a little bit stuck at 25 cents, and then they jumped to 28 cents. 2019, they were a little bit stuck at 28 cents, and then the final day of the year, they were at 31 cents. Then they jumped from 31 cents to 34 cents. So you're seeing some trends. Then 2021, they were 34 cents to 38 cents. So it appears at the end of December, they do dividend hikes. So 38 cents to 42 cents. So their payout ratio appears to be 44%. The number of dividend increases in the last 5 years is 6. The annualized dividend growth rate in 5 years is 10.67%. So if you bought one share, you made 152 with a 3.30% dividend yield. So that is very attractive as a dividend stock. So I'm going to touch up base with you guys. You guys have given me a lot of reviews for dividend stocks. I will do the best I can. There's some that are very attractive that you guys have mentioned to me on Instagram, Twitter, and Facebook, and even just in real life sending me a text message. So I will get to those dividend stocks, but I'm very excited to show you my dividend income for October, and you're going to see some changes for my dividend portfolio as I focused a little bit more on dividend growth. And then I'm going to start going back to QYLD, RYLD, and XYLD probably maybe a few years from now, because right now the strategy is appearing to work, what I'm doing. And by buying certain dividend growth stocks like these guys, I'm giving dividend hikes, and I should have enough money to have enough shares with these guys to buy other shares like Coca-Cola, like Unilever, like ARC, which I will do another video on business development companies probably this week for you guys. So I just wanted to touch base with you guys regarding this channel and the changes that I'm making with my dividend portfolio, as well as my dividend income, and making some changes. So there's some things that I like and don't like with my portfolio, which I changed, and things are, I think, going to pay off. Maybe in about a year, I'm going to really start seeing the difference. So I have more resources to allocate. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will have a video for you guys tomorrow, so make sure you hit that notification bell after you're subscribed if you're new to this channel. You guys take care and have a great Sunday.